James Rickards is publicly saying 24,000 an ounce. Mike Maloney, 10,000 an ounce. It's as simple as them revaluing gold, telling that the president tells the Treasury secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury general account will get 1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates, for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people. They push a button, create 6 trillion, and give it to the Treasury, which devalues the dollar massively.
James Rickards has publicly forecasted that gold could exceed $24,000 per ounce, as part of a scenario where the U.S. moves toward some form of gold-based monetary reset. Mike Maloney suggests gold could move into the $5,000 to $10,000 range in the context of a U.S. debt spiral and monetary devaluation. News reports confirm that the U.S. Treasury's gold holdings have a market value of around $1 trillion when valued at current gold prices. Analysts have discussed that a revaluation of the U.S. gold reserves could provide a large windfall or accounting gain for the government. Such a move would benefit central banks holding gold but would also cause a sharp devaluation of the U.S. dollar, effectively resetting the monetary system. Andy, a precious metal expert, argues that the U.S. may deliberately devalue the dollar to solve Triffin's dilemma and restore manufacturing strength. Drawing parallels to Roosevelt's 1933 devaluation, he suggests the government could peg gold to Treasury bonds and use stablecoins like USA Tether. As profits from this system are reinvested into gold and Bitcoin, both assets rise while the dollar weakens. This, he claims, is a planned shift away from dollar reserve dominance toward a gold-anchored, multi-currency trade system that supports reshoring and economic revival, even if it means temporary inflation and universal basic income. The markets are always shifting. Don't fall behind. To keep ahead of the curve, subscribe and like this video. Please leave your comments in the space provided below. We would be very grateful to hear from you. Let's dive into the interview.
Whether or not they do that, which I do believe they will, even if they just market to market, it's devaluing the dollar. That's what Roosevelt did in 33. Right there, he confiscated gold at $20 an ounce and devalued the dollar by 40%, making gold $35 an ounce. This would fit hand in hand with what? Triffin's dilemma. The dollar's too strong. Let's devalue the dollar. Let's let all of the world trade in local currencies. Look at what the BRICS are doing. Trading in local currencies over Enbridge, settling imbalances in gold. Gold is not replacing the dollar. It is replacing what stands behind the dollar, the Treasury market or trust. All of these nations want to trade over a bridge network with their own local currencies, settle imbalances in gold. Look at the Shanghai Gold Exchange. They're building multi-jurisdictional vaults all around the Belt Road Initiative. They just finished one in Hong Kong. They're building one in Saudi Arabia right now. Saudi Arabia, who was a full participant in Enbridge, the technology that allows banks to trade cross-border free from SWIFT intervention. And then they're going to go all throughout the Belt Road, settling imbalances in gold, not in one jurisdiction, kind of like Venezuela asking the Bank of England, can we have our gold back? No. So now it's going to be all over the place. All right. So back to what's going on here. We bring back all this gold. We are the largest importer of gold in the world since November. We've been a net exporter forever. All this gold's coming in. No one's asking who the hell's doing it. Who's buying billions and billions and billions and billions worth of gold and silver? Who? No one's talking about it. I really do believe that the Exchange Stabilization Fund is involved in this and taking possession of it on behalf of the Treasury Department, not having to get congressional approval because it's for national security. But none of that even really is relevant. So if Judy is right and they peg it to the back end of the Treasury, first and foremost, that would allow you, because there's no upfront borrowing costs. All of the bonds, with the exception of the 50, would have zero interest, maybe the 30. They would be redeemable in gold. The more stupid you are with monetary and fiscal policy, the higher the price of gold goes. So the people will buy our bonds. They can trade off of them. Judy said, and there'll be stable coins issued off of those too. So in any case, they will, in theory, buy the bonds, which are redeemable in gold, which are very liquid throughout the system, and then they will be able to stand for redemption of gold in the end. But that allows you to bring back manufacturing at zero upfront borrowing costs. But what about the Triffin's dilemma. What about the strong dollar? I got an idea. Let's call something the Genius Act. And Trump's former crypto czar, Bo Hines, I think his last name is Hines. If it's not, forgive me, but I think it is now the president of USA Tether. What is USA Tether? USA Tether is the stablecoin that will back every dollar issuance, period, moving forward at some point. Those USA Tether tokens, which will settle like Venmo and Zelle, all right? Think of it this way. You go to buy a new Ford F-150, you have to leave the dealership because they're not going to take a personal check from you and go wire the money to them. Now you'll bang, I just did it right off my phone. It's the blockchain form of dollar trading where everything will be backed by the stable coin USA Tether, which by law has to be backed by what? U.S. Treasuries, short term. This creates synthetic demand for the front end of the curve. As crazy as it is, stablecoin backing debt, not real stable. But every time you buy anything, whether it's a pack of cigarettes at a grocery store or a new suit at Nordstrom's or a new car, whatever it is you're buying, it will be moving via the stablecoin network. It's not implemented full yet, but it's coming. I mean, the law was passed. So everything we will see, you'll look at your bank account, you'll see dollars, but when you move it, it goes through the USA Tether network and settles instantly, which are all backed by short-term treasuries. Now, here's the kicker. They get to keep the spread between the issuance of treasuries and the stablecoin. You as a stablecoin mover, you're not getting the interest on that, on what's standing behind it. Short-term treasuries, they are. But with those, the profits, they're required to buy more short-term treasuries to push rates down, and gold and Bitcoin. They already own over 8 billion in gold held in Swiss vaults. They were just at the Beaver Creek Summit, which is with all the miners, right? They are interested in buying gold and more short-term treasuries and Bitcoin with all of the proceeds that everything is moving on all throughout the world will be backed by this stable coin, pushes rates down synthetically. And with the profit, they buy gold, which pushes gold up, which does what to the dollar? Deflates the dollar, depresses the dollar, right? Pushing the dollar down. Exactly what you're talking about. Same thing with Bitcoin. How do you pay off your debt? Let Bitcoin go to the moon because they continue. Look at how much gold Tether just bought the other day. Billions worth. Billions. They pushed Bitcoin up, and I'm not even a Bitcoin guy, but they're going to try and pay off the debt with it. The Russian finance minister is right. They'll let Bitcoin go up and they'll start to pay off the national debt. But by letting gold go higher and higher and higher and higher and having a mechanism that continues to buy it, plus all the gold coming in, billions and billions and billions, makes the gold stash go higher, sure, but then it also devalues the dollar. Now let's put it all together. How do you bring back manufacturing? I know you peg gold to the back end of the bond market like Judy Shelton is going to happen next July 4th. You bring it back at zero upfront borrowing costs. How do you sell your product to the world? You give up on the reserve standard and you massively devalue the dollar by letting gold and Bitcoin go to the moon. And that's exactly how you do it. Now, in essence, Trump gets up on stage and says, we screwed up a good thing. We used to be the world reserve currency that kept the prices of things we buy cheap, that kept our asset prices high and interest rates low. However, things have to change or our children have no future. Now, the only side effect I could see of all of this is universal basic income for a couple of years, because if you do not own assets in this environment where they have every intention of destroying the value of the dollar to reshore manufacturing, and someday he would say, we have a future. We can grow ourselves out of this problem. We can be the engine of growth again, of manufacturing, of ingenuity. Because if you're not working in Wall Street or in Hollywood making movies or in California with IT, where are you? What is the future of your industry? We must bring back manufacturing. There's nobility and honesty in that. But the only way to do it is to give up on being the reserve standard. Let every other country trade their own currencies and let gold be the arbiter of value. Honest to God, in my heart, I believe that is what is happening right now. So this volatility we saw in gold, which is right back to where it was, means nothing. And yes, you should cost average, but I do believe when guys like Jeffries, or companies like Jeffries says 6,600, when Gundlach says, the Bond King says 25% gold's not too much, when Michael Hartnett says 20% of your assets in gold, when all these and Morgan Stanley, what do they really believe? What do they really think if that's what they're telling the public? So, yeah, this is the debasement trade. And the theory is you stay in dollars, you're destined to go broke.
Andy here argues that gold's rise has far outpaced wages, highlighting growing inequality and the failure of official inflation data. As the dollar weakens and rates fall, wealthy investors are likely to move out of short-term treasuries and into hard assets like gold and silver, which have surged this year. Gold, he says, will eventually be pegged to the monetary system, while silver remains the generational buying opportunity given its extreme undervaluation relative to gold. Let's get into the details of the interview for further insight.
So I wrote down some notes, and I don't know if I remember reading this last night. I don't think I wrote it down, but basically what it said was that the rise in gold is massively outpacing people's increase in pay. And it's like doubled in the last 18 months. And it's like the most ever, where I think the average wage in the country was like $36. So it takes 120 hours or whatever to buy 1 ounce of gold. It's the largest discrepancy ever. Gold is outpacing income. But look, inflation is a lie, Daryl. I mean, it should be the CP lie from the BS, not the BLS, because that's exactly what it is. Not only do they exclude food, energy, and housing and taxes, which is the biggest cost to all of us who work, they continue to massage the numbers and change them. If coffee's too high, they'll replace it with tea. If steak is too high, they'll replace it with ground beef. They want us to believe that inflation is at about 3%. They have missed for I don't know how many straight months, 50, 60, 70 straight months or longer. They have missed that 2% target. And now they're going to push the short-term rates lower through this synthetic energy coming through the Stablecoin Act. And think of it this way. Think of the guys of Rick Rule's level or of Eric Sprott's level, the very wealthy, sophisticated guys. So forget about the fact that they wouldn't even touch these things. But think of the very wealthy people who have tons and tons of money, who have kept their money in short-term treasuries for a while now, because short-term treasuries for the last year or two have paid a nice return. But is it nice? Because the CP lie, if you ask John Williams to come on your channel, the gentleman who runs shadowstats.com, all he does is calculate unemployment and inflation the way they used to be calculated before the Reagan administration. And he would tell you right now inflation is 11%. The dollar is down 11% this year, by the way. He would say add an 8 to any inflation number you see, an 8%, and that's the true number. But the dollar's down 11%. So if you bought short-term treasuries at 4% on a 6-month treasury, you rolled it into twice, so into a year, you get 4% return on the treasury. The dollar's down 11%. And so you're negative 7%, right? So, but let's just take the CP lie for what it is and call it 3%. Okay, fine, it's 3%. And Trump wants to, through the passage of the stablecoin, he wants to bring rates down much lower, let's say 2%, right? So who in their right mind at an institutional level is going to take, even taking their own lying statistics, a real negative return on whatever money that the bond market is dead? This will incentivize people to do anything but buy short-term treasuries. And so the point of it is that inflation, I believe, is going to go much, much, much higher. They have no choice through the debasement of the currency. That is a byproduct of all of this. And in terms of where that big money is going to go, they ain't going to go in treasuries. They're going to buy things like gold, which further devalues the dollar. They're going to buy assets. They will not keep their money in things like short-term treasuries when rates are falling and inflation is rising. They won't. And so I think it's even a bigger bullish case. But I do think this, that if you don't own assets, you're in trouble. And look at it, again, dollar's down 11%. Short-term treasuries, 3/4 through the year this year are up 3%. And gold's up 55, silver's up like 70, 65. So it's an accelerating trend. And look, you don't need to be wealthy to start to de-dollarize or start to own assets, even if it meant buying an ounce or two of silver every time you get paid. Whatever it is, the best thing you can do, in my opinion, is to own assets and mitigate your exposure to money within the banking system, which is acting more like a melting ice cube than it is a store of value. All that happens is it gets to its 200-year price average of 42 to 1, it's a double. Now you switch it into gold. That's 6 times higher than it's coming out of the ground at, by the way, at 42 to 1. If it got anywhere near its geological average, it's roughly 10, almost 11 times undervalued geologically. Does that mean something? I think at some point it has to mean something. I mean, if gold is coming out of the ground right now at a 7 to 1, or silver is at a 7 to 1 clip to gold, but it's priced at 82 to 1. Doesn't that have to at least get somewhere closer to that number, to that geologic real number? Yeah, I think what it is, it's the opportunity of a generation, Daryl, because when someone says to you, I can show you how you can double your money, usually you should run, because it's BS. It's the risk outweighs the reward. But if I say to you, buy silver, what you want to buy anyway, and instead of buying gold, or take an ounce of gold and trade it to silver, and if all that happens is you reach the average of the last 100+ years, you switch it, you double. Just the average.
What are your thoughts? Do you believe a deliberate US dollar devaluation tied to a gold revaluation could realistically solve Triffin's dilemma and restore domestic manufacturing strength? If gold becomes pegged to the monetary system as Andy suggests, how might this impact silver's valuation and its role as a generational investment opportunity? If you appreciate this video, please hit the bell button for timely updates, subscribe to the channel, and like the video. Also, leave a remark with your ideas. We value your presence and thank you for your support.